When you go to the grocery store, you're going to be paying more money, which means you're going to be paying more taxes to the government. Whether you know it or not, that is a fact, that the hidden tax of inflation will continue to take money out of your pocket. And that's what we're watching happening. And that is the calamity of the Federal Reserve.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 23rd through September 30th, 2024, while supplies last. First, we feature the 1-ounce gold Horwitz Dragon Bar at just $69 over spot. Next, the 2024 1-ounce silver American Eagle is just $5.25 over spot, the lowest premium in months. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Todd Bubba Horwitz. Todd, thank you so much for joining us today.
Always great to be with you, Elijah.
Well, it's great to have you today. I did want to discuss the Fed rate hike. And also, it's very interesting because every single day now, it seems like rates continue to rise. So what is happening with interest rates? But it seems like, the Fed cut rates, but in the markets, we're seeing the opposite.
Well, you have to remember that the Federal Reserve is not cutting rates for you and me, the American people. It's cutting rates for the banks to borrow from them. Okay, that's banks go to the lending window of the Federal Reserve. So what we have seen is we've seen a scam, is what I would call it, to cut rates to increase inflation so that the government can collect more tax dollars because they can't raise our taxes, but they can certainly get us to, as they call it, the hidden tax of inflation. But since the rate cut, mortgage rates are higher. And of course, the 10-year notes and the 30-year bonds, which if you were watching them trade, they've gone down every day and they go inverse to their rates. So when they go down, rates are going higher, and rates, the 10-year notes have gone up every day since last Wednesday when the Federal Reserve cut 50 basis points, which I had said would be a calamity and a disaster. And it's turning out to be just that.
Now, what kind of impact do you see the Fed rate cutting having? Because you say that it'll be a disaster, but it seems like we've seen also, the stock market at all-time highs. So what do you think the long-term effects of this will be?
Well, I think it'll be a disaster. I think we're heading towards either stagflation or deflation. I think that first you're going to see inflation spike once again, and that is a tool that governments use to get you to pay more taxes without knowing that you're paying more taxes. So when you go to the grocery store or your phone bill or whatever else you're paying, there is a federal tax on everything that you buy. So by creating more sales, by creating more price movement in those markets, they are creating actually more tax for the coffers of what they use. So at the all-time new highs, there's no volume in these markets. I don't put any credence into the all-time new highs. I see mass inflation coming. You're watching right now as the commodity markets have started to work their way much higher after being under pressure for years. Now they're starting to pop up pretty good, which means that when you go to the grocery store, you're going to be paying more money, which means you're going to be paying more taxes to the government. Whether you know it or not, that is a fact, that the hidden tax of inflation will continue to take money out of your pocket. And that's what we're watching happening. And that is the calamity of the Federal Reserve.
Now, you've talked about before how just this will be more and more inflation, right? The official numbers of inflation are low, but if we see easing from the Fed, which is what we're seeing, and if we continue to have interest rates fall, this will just cause more and more inflation. Can you expand on that?
Well, again, if it does create more money, okay, because you can borrow it easier, which right now you can't, but if you can, then you're going to be spending more. Remember, people don't recognize nor do they think about what they're spending. As long as they got checks and as long as they got credit cards, they keep spending money. And of course, prices are going to have to rise because we've already seen that when you look at the goods and services that we use, they are starting to rise. And you know that the retailer who's selling you the goods and services is not going to give you a discount because they know the economy is bad. Listen, we're in a recession. Okay. You have people that can't make it, that living from check to check. You've got rent. Last year, over 21 million Americans were paying 30% of their net income for rent. You can't live like that. You cannot survive like that. It is virtually impossible. And this has all been created by the lack of the Federal Reserve doing their job correctly, because they're way off mandate. They really have no business dealing with the interest rate market. That is not their mandate. Their mandate is inflation, is jobs and price stability, not manipulating interest rates, and especially to help a possible political candidate get elected. This was a horrible time to cut rates because it would be somewhat of a benefit. But at the end of the day, I think we're seeing mortgage rates have risen since last Wednesday. Interest rates have risen. Prices have risen. And it's not going to get better, which is going to mean much higher inflation for you and me.
Now, when it comes to the consumer's view of the economy, we just got the numbers out that consumer confidence has plummeted faster than it has in 3 years. Your take on that and how it could impact things going forward?
Well, I mean, it's no surprise. I mean, listen, let's face it, this administration that we have right now is one of the worst in history. They've done nothing but spend our money everywhere but in this country. Okay, they have done nothing but take our money through taxes. So it's not a shock that consumer confidence is low. And again, I would suspect that it's lower than is actually reported. I think that you're seeing the work of Harris and Bidenomics, that we are seeing the destruction of an economy, because again, we've been in a recession for well over a year. If you're a middle class person, remember, the wealthy never have a problem. They accumulate more assets when things are going bad. But of course, the people that live on a very tight shoestring budget, they continue to struggle. And of course, we know that credit card debt it's again, the dollar amount is not important, but the important part is that more people are at limit on at least one credit card paying usury rates. And if you heard Trump the other day say, we've got to cut those rates down, but the credit card lobby is so strong. I mean, you can't even go bankrupt against a credit card company. So they've got that part of the lobby. So we're seeing a destruction of an economy, all in the name or in the face of globalism or communism, which is, I think, is what they'd like to have, because they're more interested in making us, going back to making us serfs than making us actual prospering people.
It seems like what we're seeing right now is kind of the media is pushing the fact that the economy is doing well, but if you look under the surface and for example, as we just mentioned, the consumer confidence, the economy is not doing well. And really for the middle class is hurting. I know on another podcast, I believe you mentioned how the you just have to look at the middle class and how they are spending about 2% more than they're earning right now. So it doesn't matter how great wage growth is or any other economic metric, people are spending more than they can afford.
Wage growth is not keeping up with inflation. Wage growth is not keeping up with the amount of spending. And again, it's a mirror. I mean, it's a sham what we are watching. And when we see this, we continue to hear. Now, again, I've asked thousands of people, because I obviously communicate with thousands of people, and maybe 1% says the economy is in good shape. I don't know anybody who thinks the economy is in good shape. And I don't know anybody who thinks that we're on the path to get better. I mean, again, you cannot keep giving your money away to places like Ukraine and China and others and keep stealing American jobs. I mean, again, you can talk about how good or bad the jobs are. The bottom line is 66% of those jobs are going to illegal aliens, okay, or illegal immigrants. And that is not the way it should be. And all we're creating here is government jobs and service jobs, which are not high paying. Okay. So where is somebody going to now live and be able to buy a home, okay, and actually survive when the jobs that we are creating are basically minimum wage type of jobs? There's no capitalism right now. They're taking it away from us.
And in the midst of all of this, we're seeing gold at all-time highs above 2,600. It seems like every day we're just seeing a new all-time high for gold. Your take on this? And it seems like, I mean, you've said that $3,000 by the end of the year is not unrealistic. Even, the mainstream is talking about that.
Yeah, well, I was first, but again, at the end of the day, look, gold is going higher because inflation is going higher. That's the relationship, right? Now, I'm not a big believer of correlations at the same time, but gold's been rising for quite a while, telling us that the CPI number they've been giving us was a bunch of garbage anyways. that inflation really wasn't coming down, and there's no way we're anywhere near 3%. We're at best near 8 or 9% inflation. Just look at your overall bills. And gold is probably, if I were to guess, and I was going to make a trade now, because I'm a believer in gold, so don't take this the wrong way, anybody. I buy gold, I buy physical metals, which I am not selling. My kids will sell it when I drop, but I'm not selling. Okay. However, I would, if I were trading, which I do, I would be looking to take a short position here for a 50 to 60 point drop in gold, because again, it is pretty overbought here. It's been a little bit overly exuberant. And I think that you're probably going to see somewhat of a pullback. And I think for the health of the market, it would be healthy to have a little bit of a pullback in gold here. If we're going to get to that potential 3,000 mark, you need to have a pullback to build some buyers and bring in some new money once again.
Now, what about for silver? I know right now we're seeing it again above $30, which is a critical level. Do you see a pullback in silver, or are you expecting it to go into the mid 30s and 40s here soon?
Well, I think silver has pretty much had a lot of its pullback already, and I'm not saying that it has and it can't go lower, but I'm just pulling up a chart while we're talking. It looks pretty solid. It is a little bit overbought here now as well after today's a little bit of a rally, which is almost $1. Again, I think we're stuck probably right now between 30 and 32, but I would not be surprised at all if we saw 35 by the end of the year, and maybe higher. But again, I don't like to make dramatic projections of where it's gone. I think it's someday silver will take out the $49 high, which was made, I think, in 2011. But right now, I'm looking at it one level at a time, and it looks pretty good. It's come off the bottoms, which was about 27, and has now rallied nicely. The key here is going to get through this resistance level here. But I think, listen, I'm a big believer that the precious metals, gold and silver, you may need them as a currency at some point here. Okay. And that's one of the things that's pushing these things higher as well, because I think people are finally starting to compute that the paper dollar, the scam and the manipulation of the fiat currency system, which is controlled by the central banking system because they have no backing, may not be worth anything one of these days. And to buy groceries, I might need gold or silver to go out to the grocery store.
No, when it comes to trading, are you long or short gold and silver right now? Because it seems like you might be looking for a short-term pullback.
I am long both. And I trade off a couple different metrics. So I always own gold. So I'm always really long gold, even if I'm short as a trader. But B, one of my methods is still long, which I'm not going to change that, but I might short gold in another account for very short period with a stop on it if I'm wrong. Okay. Again, I'm not going to sit there and hold it because I think, but it is pretty extended here. And we have to remember that markets that get too extended, if they continue to extend, they usually collapse. So for the health of the market, we saw this move back in August where we went from 2,400 to 2,550. So now this move has been from 2,500 to 2,650. And I would expect a pullback back to probably around 2,600 and then another run to the upside.
No, on the topic of using gold and silver as currencies, I know, one more development since the last time we talked was that Russia announced that they're going to be buying more gold. The Jerusalem Post said that they're selling oil and buying gold. Your perspective on this and the move from many of these countries, largely from the BRICS countries, to continue to purchase gold?
Well, I think that we knew that it was going to happen because they wanted the gold to be a backing to their currency. I think that at the end of the day, central banks have been buying gold forever. There's a lot of things you can do, a lot of arbitrage type of trade you can make. I can buy physical gold and sell futures gold, right? And make money and create an arbitrage or create a spread without any risk to myself, basically, if I have enough capital to do so. And it's no surprise. The Fed's been buying gold too, supposedly. Now, again, I don't know that that's factual, but I've heard that. But the countries and governments are always accumulating gold because that is the standard. And even though we went off of the gold standard and the other currencies around the world went off of the standard, doesn't mean that it still doesn't have meaning, and doesn't mean that it still isn't valuable to the potential of a currency. Because when you start thinking about the paper dollar system, they keep reducing what the actual value is of a dollar. A $100 bill today, 20 years ago, would be worth, it would have been worth $300. Okay. And this is what we have. This is the destruction of an economy by continuing to overspend and not budget and continue to giving our money away. And unfortunately, The bankers are no longer the most powerful. The politicians are now the most powerful people in the world. And that's not the right position to be in. That's more tyranny than anything else.
Now, coming full circle here back to the Fed rate cut, it was a pretty big rate cut, 0.5%. And it seems like I wanted to then ask you, do you see actual rates then coming down? Because we've seen them rise, which is so strange. And also, how do you see this impacting the banking system?
Well, I think the banking system's in trouble. Anyways, that's again, there's at least 1,000 regional banks that are claiming problems. And if we could have a true audit on the big banks, which we don't get, we get that BS stress test every whatever quarter or whatever it is. I think the banks are already in trouble. I think they're already over leveraged. And I'm just waiting for the announcement for Powell to come out, unlike Paulson did in '08, and say the banks are safe and sound. Okay, which would be the indication that they're really not safe and sound and that there's a problem. I think the banking is going to fail. I think that no matter what they do with the rates are not coming down for the average American to spend. Okay, the cutting in rates is more of a tax play for government. And again, I don't know how they shouldn't have cut rates last time, and not because I'm against cutting rates. A, it was a political move, but B, you cannot cut rates when you have too high inflation because it's only going to spur on more inflation, which is going to continue to keep rates higher. Okay, because again, remember, what the Fed borrows loans to banks at doesn't mean that's the rate that you go out and borrow at. And the borrowing rate is high. And if you look at the peer-to-peer lenders, they're looking at 15, 16%. Okay. Your mortgages in Las Vegas at least are 8%. So again, those are not good numbers with a rate cut, especially when they continue to go higher. And this is the market talking. And that's why the Fed made a mistake.
Can you expand a bit more on that for our viewers, that it just the rate between the Fed and banks, right, isn't necessarily going to impact the average consumer or mortgage rates? How are those not necessarily related?
Well, again, there's a spread, right? So the banks go to the federal loan and they borrow from the Federal Reserve. Okay. And let's say they're borrowing at 4.5%. There's now a spread that they have, and that's how banks make their money. They borrow money, they lend out, and by fractional banking, they have the ability to lend out 10 times what they're holding. Okay. So first they take the money they borrow from the Federal Reserve, they take that liability, turn it into an asset, and then they lend out 10 times that amount. But again, what they charge to borrow has nothing to do with the Federal Reserve. It has everything to do with what the bank is willing to loan that money out at. So we've all watched the credit score story, and the better credit score, the cheaper the interest rate you're going to pay. But they still, if there's a demand for money, they're going to keep interest rates higher and work on a bigger spread. If you're in risk capital, like a farmer, for example, the farmers always pay 2 to 3 points over normal lending. So as long as there's a demand for money, rates are going to remain high because the Federal Reserve only controls the rate from the federal funds rate to the bank. The bank controls the rates to the rest. So if the banks are keeping rates high, which they are, and they're continuing to go higher because the bond market is telling them that they should be higher, then the rates will stay high no matter what the Federal Reserve does. It just means the banks are making more money, to put it in real terms.
That's a very good point there. And it seems like a lot of the things that have happened in the economy and the financial system over the last few years have really hurt the middle class. We've seen inflation, we've seen higher interest rates, which hurts the middle class as well. And the middle class is not doing very well. So for our viewers out there who might be, struggling financially, what is your perspective? What are some ways that people can be aware and prepared for the times ahead and make prudent decisions?
Well, I think if you are very close and you're not saving enough money, you better learn or figure out a way to save more. Okay. You're going to need capital. Listen, whether you're investing or you're just trying to make it from week to week, you have to budget yourself. You cannot live like the government. They don't get any issue because we fund the government. But when you're funding yourself, you have to worry about other things. So you have to cut back on your spending to make sure that you can pay your rent, pay your car payment, feed your family. And then you worry about if you're going to go out to dinner somewhere. But you have to make sure you take care of the basics first. Now, if you're in a little bit better shape, then you look for investment potential. But whenever you're investing, do not leverage your investment with money that you don't have. You can only invest with capital that you have, because leverage will force you out. And I assure you this, that when you're forced out, it will never be at the best price. It'll be at the worst price that you won't want to have. But you first have to look inside of your own budget in your own family and figure out what it costs to really live and what you earn, and then start putting money away. And remember that you can make all the investments you want. If you have credit card debt, you're not making 25%, which is what you're paying on your credit card. So your first objective is to pay off the credit card debt before you do anything else. Okay. Even my son, who is a financial advisor, tells his people, you can't make 25% year here. You have to pay off your credit card debt first, because that's the only way you can ever get out of debt. And again, debt is good if you can afford it and know that you can pay for it. But when you're paying 25%, which are the usury rates that credit card companies charge, you can never get out of debt. So you must, before you do anything, pay off your credit cards, because that's like getting a 25% yield on your money.
All right. Well, if our viewers are interested in learning more, they can go to bubbatrading.com. We have an affiliate link in the description of this video, and the affiliate coupon code is Liberty1000, Liberty1000. Can you tell us a bit about Bubba Trading?
Well, we teach people how to trade. I mean, I do a number of different things. I teach people who have equities how to hedge them, okay, and protect them. So example, I never sell my long-term 401k stuff, because I'm always in the market, because I'm hedging and accumulating more. We teach people about a day trade. In fact, I day trade live with people every morning from 9 to 10 Eastern. And we do a lot of teaching of options. I teach financial literacy and teach all the different types of ways that people can trade, depending on if you're working or retired or you want to do this for a career. There's a lot of different ways to skin the cat, as they say. So I'm a real big fan of education and helping teach my people learn how to do this better, because there are too many swindlers out there that make promises that can never be kept. Because again, if somebody promises you, take 5,000 to 5 million, you have no chance. You're just giving away your $5,000.
Fantastic. Well, Todd, Bubba, Horwitz, we really appreciate your time today. Thank you so much, and God bless.
Always great to be with you, Elijah. Thanks, and keep up the good work.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 23rd through September 30th, 2024, while supplies last. First, we feature the 1-ounce gold Argor Horwitz Dragon Bar at just $69 over spot. Next, the 2024 1-ounce silver American Eagle is just $5.25 over spot, the lowest premium in months. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.